Why essential workers are going extinct might sound like an exaggeration because these are the very people who keep society functioning every single day, including nurses, teachers, construction workers, delivery drivers, factory workers, and countless others who form the backbone of modern economies. Yet despite their importance, something is quietly changing as fewer people are choosing these jobs and more experienced workers are leaving, creating a growing shortage that is starting to affect entire industries. And this is not happening because these jobs are disappearing, but because the incentives to do them are weakening as the modern economy evolves. Because if we go back a few decades, essential jobs were seen as stable, reliable, and respectable career paths that provided long-term security, predictable income, and a clear role in society. But today, that perception is changing as these jobs often come with high physical or emotional demands relatively lower pay compared to other professions, and limited flexibility, which makes them less attractive, especially to younger generations who are entering a world with more options, higher expectations, and different priorities. And this creates a situation where the supply of workers willing to take on these roles is decreasing, while the demand for these services continues to grow, particularly as populations increase age and rely more heavily on healthcare, logistics, and infrastructure. And this imbalance between supply and demand is one of the key reasons why essential workers are becoming scarce, and this scarcity is further amplified by structural changes in the economy, including urbanization, rising cost of living, and shifts in education where more people are encouraged to pursue higher education and white-collar careers, which can lead to better pay, working conditions, and social status. And while this shift has benefits, it also creates a gap in essential sectors that require skilled labor but are not always aligned with the aspirations of the modern workforce. And at the same time, technological advancements and automation are changing the nature of work, but not always in the way people expect. Because while some routine tasks can be automated, many essential roles still require human presence, judgment, and adaptability, which makes them difficult to replace with machines. Yet, these same roles are often undervalued in terms of compensation and recognition, creating a paradox where the jobs that are hardest to automate are not necessarily the ones that are most rewarded. And this imbalance can discourage people from entering or staying in these professions. And another major factor is working conditions, because many essential jobs involve long hours, physical strain, emotional stress, and limited flexibility, which can lead to burnout and high turnover rates, especially in sectors like healthcare and education, where workers are expected to manage increasing workloads with limited resources, and this creates a cycle where shortages lead to higher workloads, which lead to more burnout, which further increases shortages, and as this cycle continues, it becomes increasingly difficult to maintain service quality and system stability. And this is already visible in many countries where hospitals face staffing shortages, schools struggle to find teachers, and supply chains experience disruptions due to lack of workers. And this highlights a deeper issue because essential work is critical for the functioning of society. But the economic system does not always align incentives in a way that supports and sustains these roles. And this raises an important question: if essential workers are so important, why are they disappearing? And the answer lies in the intersection of economics, incentives, and social values, because labor markets respond to supply and demand, but they are also influenced by wages, working conditions, cultural perceptions, and policy decisions. And when these factors do not align with the importance of the work, shortages can emerge even in critical sectors, and this is where the real story begins. But what makes the disappearance of essential workers even more dangerous is that it does not happen suddenly, like a financial crash or a market collapse. Instead, it is a slow, silent shift that builds over time until one day the system starts to break under pressure. Because when there are not enough workers in critical sectors, the effects begin to spread across the entire economy. As hospitals become understaffed, leading to longer wait times, reduced quality of care, and increased pressure on remaining staff, which accelerates burnout and further reduces the workforce. And at the same time, schools struggle to find qualified teachers, which impacts education, quality student outcomes, and long-term human capital development. And this is important because education is directly linked to future productivity and economic growth. And when that system weakens, the effects can last for decades and beyond healthcare and education. Other sectors, such as logistics, construction, and public services, also begin to feel the strain as fewer workers are available to maintain infrastructure, deliver goods, and support daily operations, which can lead to supply chain disruptions, increased costs, and reduced efficiency. And as these issues compound, the cost of basic services begins to rise, because when labor becomes scarce, wages increase. But if productivity does not increase at the same rate, these higher costs are passed on to consumers in the form of higher prices, which contributes to inflation and reduces purchasing power. And this creates a feedback loop, where rising costs make essential jobs less attractive relative to other opportunities, which further reduces the supply of workers and intensifies the shortage. And this cycle can become difficult to break without structural changes in how these jobs are valued, compensated, and supported. And at the same time, governments and businesses are forced to respond by exploring solutions such as increasing wages, improving working conditions, investing in training programs, and in some cases relying more on immigration to fill labor gaps. But each of these solutions comes with its own challenges, because increasing wages can raise costs for businesses and consumers. Improving conditions requires investment and systemic change, and immigration policies are often politically sensitive and require careful management. And another potential solution is automation and technology, which can help reduce reliance on human labor in certain areas. But as mentioned earlier, many essential jobs require human skills that are difficult to automate, such as empathy, critical thinking, and adaptability, especially in fields like healthcare and education, which means technology can assist but not fully replace these roles. And this highlights a fundamental issue in the modern economy, where value is not always aligned with importance, because the jobs that are most critical for society are not always the ones that are most rewarded. And this misalignment creates long-term risks, because if people do not see a viable future in these professions, they will choose alternative paths, leaving critical gaps in the system. And this is why some economists argue that the solution is not just economic, but also cultural and policy-driven, where societies need to reassess how they value essential work and ensure that compensation, working conditions, and social recognition reflect the importance of these roles. And this may involve rethinking wage structures, investing in public services, and creating incentives that attract and retain workers in these sectors. And at the same time, individuals are also adapting to these changes by seeking careers that offer better work-life balance, higher income potential, and greater flexibility, which reflects broader shifts in values and expectations in the modern workforce. And as these trends continue, the labor market will continue to evolve, and the challenge will be to ensure that essential sectors remain adequately staffed and sustainable. And this is where the future becomes uncertain, because if the current trajectory continues without significant intervention, the shortage of essential workers could lead to structural weaknesses in economies, where critical services become less reliable, more expensive, and less accessible. And this would not just be an economic issue, but a societal one, affecting quality of life, stability, and long-term development. And this brings us back to the original question: why are essential workers going extinct? And the answer is not that they are disappearing completely, but that the system supporting them is becoming less effective at attracting and retaining talent. And unless this system is adjusted, the gap between the importance of these jobs and the incentives to perform them will continue to grow. And this is the real hidden crisis, because economies can survive many shocks, but they cannot function without the people who keep them running. And this is why the future of essential work is one of the most important economic stories of our time, because it will determine not just how economies grow, but how societies function and whether they can maintain the systems that people depend on every day.